For more on Oracle and the pullback in the AI trade, let's bring in D.A. Davidson, Head of Technology Research, Gil Luria. Gil, great to have you with us. I know you were listening in to our conversation. I mean, in your view, is Oracle some sort of a canary in the coal mine? I mean, is this sort of the cautionary tale that a lot of these other players will fall to in terms of, you know, the optimism fading away, the concern about the debt levels growing, et cetera?
It's a cautionary tale in the sense that they represent the bad behavior in the AI build-out. Oracle and CoreWeave are the bad behavior. Microsoft, Amazon, and Google have all the customers, have cash on hand, and have tremendous cash flow. So when they build a data center, it's already sold 3 years in advance. And they just told us 2 weeks ago that just over the last 90 days, they've seen a positive inflection point in demand for AI from their customers, which is everybody. So that's healthy, responsible investment. The irresponsible investment, as you've been talking about, is when you start borrowing to provide capacity for startups. And that's what Oracle did. Oracle originally told us on their earnings, oh, we just won $300 billion of backlog from several companies. The next day, we found out it was only OpenAI. Then we subsequently found out that OpenAI has committed $1.4 trillion and has no intention of living up to those obligations. It considers it a flexible arrangement that they can consume as much as they want. So they commit $250 to Microsoft and $38 to Amazon and $25 to CoreWeave, and they'll spend what they feel like. So we know that it's not real demand. And then we found out that Oracle's margins on this business are so much lower than the core business that we're not sure that we want them to grow this business. They said 30-40% gross margins on this business as if that's a good thing. Their core business is 80% gross margins. This is a bad business with very low margins when you don't have the customers, which they don't. All they can do is resell this capacity back to the people that do have the demand, which is Microsoft, Amazon, and Google.
So at 227, we've basically done a full round trip in terms of the gains that Oracle made on all the optimism and then fallen back. Are we at a level here that's sort of as stable, or should we look at Oracle differently because of the way they manage the message?
It's more stable at 32 times earnings than it was at 45 times earnings. Because let's not forget, the core business...
Should it be lower because of what they told us, which didn't come to fruition?
Yes. Yes. We should definitely keep everything they say from now on with a little more grain of salt, just because of how this all transpired. But Oracle itself has a core business that grows 5%, that is very profitable. It does have a cloud business that's growing. Let's forget about the OpenAI false promises. Their core business in cloud is growing. They have good customers there like ByteDance. They may end up owning a piece of TikTok USA. Those are reasons to get excited about Oracle beyond the core business. But OpenAI and that $100 a stock in Oracle stock of appreciation, it makes a lot of sense that that's completely gone away now.
Yep, Gil, listen, absolutely. I think you're right. Their cloud business, probably low to mid-margin stuff. So, you know, maybe it's not deserving of the multiple. So how do you back of the envelope do it? You know, I look at this and say $8 next year, a 25 multiple is historically probably about right. It gives it a $200 stock. That's where I think the value should be found in Oracle.
That's right. When we get back to the 20s or the mid-20s, it could become interesting. Right now at 32, it's not cheap. It is still getting credit for the cloud business doing better. And again, part of the cloud business is a good business. The part where the traditional hyperscaler business, where their big customers are companies like Zoom or ByteDance, that's a fine business. It's not as good as the core business, but that's a fine business. The renting out GPU business, if they have a positive margin at all, it's very, very low.